everybody, good afternoon. This is Neil with Simple Futures, and today is March 1st of 23, and we're right now at the closing bell on Wednesday here, March the 1st. So here's what we know. The month of February is now in the rear view. It's in the books. Opened at 4085 and about 3/4 and closed. Yesterday's settle was 39.75.5, losing about 110 ES points on the month of February, which is about 2.5%, after being up 6.2 in January. So that puts us net positive plus 3.7% year to date. And as of Globex open last night, the week open, which is, the month open to start the month of March, opens at 39.68.5. So we'll mark against that for March to kind of see, what's going on. Last I was with you was on Monday as we were preparing to wind down February, which would be to kind of anticipate a little bit of softness. It's gotten a little softer than what we had in mind. But that little bit of softness was to sit down into about 39.65. And for reference, we opened last night at 39.68.5, so we're talking right in the ballpark, right? We're looking at winding down to about 39.65, and the reason for that was that puts us at last week's balance. If you remember, I'll show you in a minute on a volume histogram. That's what that is. But before we get there, I had in mind also showing you why I'm surprised, honestly, that we haven't really bounced off of this level today, being the first of the month. And prepare for what if in the event we do get a little bit of additional selling here. That because as it is right now, I'm wrong, right? I mean, I was looking for bounce to start today, first of month. So if it doesn't get it together here real quick, then I need to prepare for, well, then what if, and it does continue to work its way a little bit lower. So as you can see here, right at the mark right there, we'd be thinking, okay, here's another reason for support right there. From the October low to this last recent swing high, that is a 382 retrace. It's more than that. Check it out. If I come from the October, or from the this December, this most recent swing low, it's also on that swing, it's also a 618 retrace. So we've got a 382 if you come from the October, and a 618 if you come from the December, with stacked or confluence on retracement levels right there. Okay, so now take that over to the volume, and we see that here's the reason for the print. It's right there. It was last week's most accepted traded price at 65, and so that would be the idea for support for a little bit of pullback this week, to find that as support on a higher low and start to mark up on first of the month. Well, as of right this minute, end of day, on the first day of the month, we've yet to see that bounce. And fact is, it's a little softer than what we had in mind. It goes out today 56 instead of, call it 55 instead of 65, or 56 really instead of 65. So, as I mentioned a minute ago, in prep for the what if additional, kind of downtick for the remainder of this week, then the answer, I would be looking down to about 39.15. It's not what I had in mind, but it is my plan B, or scenario 2, for what if, and there is some additional downtick, more so than what we already set out for anticipating. In the event that it's more than that, then there's a bearish target down 39.15. And what What I want to do is now say, okay, well, that's what if we're wrong and it does, continue down. So here's the most immediate and first and foremost, just initial, if you will, tripwire for lean long above, and that's 39.65. However, I got to tell you, that is unfortunately not out of the woods. Just in order to beat that is really not out of the woods. The next thing that comes into play and very well could be a problem would be this 39.90, a mere, what is that, like 25 points above, not really making much of a move there, and we run into another overhead at 39.90, and then once above there, the next level that you'll have to really pay attention and watch very closely on the way up will be, I got to tell you, it's a problem until it's not, and that's going to be 40.15. That's an issue. The above 39.90, you've got another real battle on our hands here at 40.15, as far as the bulls are going to need to do some work really to get through there. Now, once above that, hey, it gets a lot easier. Okay, these are these are some real issues to get through. 39.90 and 40.15 are going to be something else. Now through there, it's look, it could pretty easily be the target that I've already pointed out for you earlier this week, and that would be the kind of the ultimate of bull targets on the top side, that 40-60 area on the top that I already pointed to. That would be still very fadeable and shortable, but that is a bull target for this week. That's a bull target for this week. That is still very, very, very shortable, fadeable for another leg lower after, right? So all I'm trying to do this week, and I was trying to lean a little bit bullish this week, was allowing this thing to bounce on a retracement, kind of a reprieve, just kind of a breather on the heels of the onslaught of selling that's occurred initially, and that was 250 points of selling in like 9 days, allowing it to get a first of the month, new money in first of the month breather for a few days to be a little bit of a bullish uptick that we still look at selling that uptick, still look at fading bounces for another leg lower into the March expiration. You've got the targets. Once we get, another selling opportunity from a little bounce, we have targets lower that we already know about. You got trades on for them for the March OPEX that are lower, lower than all of this that we're trading right now. That's look, I hope that makes sense, because I know it could sound like I'm talking out of both sides of my mouth. I'm not. I'm, in summary, a little bounce this week as a catch your breath market, kind of a little uptick on first of month that would be so far not working, but I was looking for a little bit of support. 39.60 area here, support for a little breather of an uptick that we sell the bid, the pop, for then the move lower down into what is it now, 2 weeks out? Yeah, into March OPEX, which is still 2 weeks out. Okay, so 39.65 right here, most immediate initial tripwire that says long above, short below. If it fades there on upticks and fades there, you got a bearish target. Above there, you put your caution cap on again at 39.90. Very important. Going to be difficult to deal with, I'll tell you. If it gets through there, one more time for caution caps at 40.15. Above there, it's a lot easier. Until you get above there, frankly, it's not easy. And it's going to be a battle of everything between 39.65 and 40.15 it's a battle, and a hard fought one and a choppy one, and the victor is at this point, very much unknown. Until this is really decided and fought. So, okay, I'll see what you think about this in the comments. Be easy on me. This is a tough one, but we're trying, and we'll see how it turns out. Okay, good trading. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me